Good morning, everyone. Any discussion on any topic can take place in two ways. One of the way is to discuss the law as it stands today. The other way is to discuss the law as it should be. Our today's theme would be to discuss the law as it stands today. Having discussed the theme, let us now discuss about the topic, today's topic, that is Form 10F. A lot has been talked about Form 10F recently, specifically after the requirement of submitting it online was made mandatory. The entire presentation is being divided into 6 parts. The first part being the genesis. Why Form 10F? What is the need of Form 10F? From where this requirement is coming? The second, uneasiness. What is the reason for uneasiness? Why there is a sudden uneasiness among the stakeholders? Why there is an apprehension among the stakeholders for submitting this form online? The interplay of Form 10F or other mandatory things vis-a-vis the return filing or exemption. The interplay of higher withholding tax vis-a-vis the relaxation that is being given. After all these concepts have been discussed, there will be a small puzzle which will be solving that will help us understand whatever is being discussed in today's session, which will be followed by a frequently asked question, the questions which we find everyone or majority of us face in cases, and thereafter there will be question answer session. If any audience feels that there is any question which is to be addressed or which is relevant, they can put it in the chat box. It will be addressed by us in the appropriate time. I will be running the presentation in a way that I will be explaining the concepts first, and thereafter I will be moving to the next slide. So it is more like I will be explaining the entire concept, and then I will be moving to the slide which will display the things which I have just concluded. However, if I'm referring any legal literature wherein I want the audience to have a look at the language of the law, there I will be displaying the what you can say, the slide alongside only while I'm discussing. Form 10F. So like we all know, a non-resident is subject to tax in India on any income that is earning, which is taxable under the domestic law. However, if the said income is non-taxable due to the tax treaty, then the non-resident is not required to pay taxes. An example can be a non-resident is having a business income from India, but the non-resident is not having a permanent establishment in India, then the non-resident is not required to pay taxes in India. Another example can be, which is very often used, fees for technical services. So if we see the domestic law, the tax fees for technical services, there is no make available requirement. But if we go to certain treaties, Singapore Treaty, US Treaty, there is a requirement of having a make available condition to be satisfied in order to tax anything as fees for technical services or fees for included services. So is it that the non-resident can himself decide that, okay, I am eligible for treaty benefit, and as per my reading of the law, I am covered by treaty provision which are more beneficial and I should not be paying taxes? Is it that simple? The answer would be no. The non-resident is required to furnish certain information, basis which it is decided whether the non-resident is eligible for treaty benefit or not. So from where this requirement is coming, and why we say that, okay, even if the income is taxable under the domestic law, but it is not taxable under the treaty, then the income will not be taxable. If we see section 4, which is the charging section, section 4 is subject to other provisions of the act. So if we see other provisions, one of the other provisions is section 90 or section 98, depending whichever one is getting attracted. So the treaties are entered under section 90. So why, when we say that, okay, the income is subject to tax under the domestic law, but it is not taxable under the treaty, and the non-resident is not required to pay taxes in such a situation, that is because of the reason Section 4 is subject to other provisions of the Act. So when we see Section 90, okay. When we see Section 90 subsection 4 tells that a non-resident is eligible for treaty benefit if the non-resident is submitting certificate of tax resident. What is certificate of tax residence? Like we all are tax residents of India, we might be having PAN number. But is it that the PAN number itself is certificate of tax residence? No. There is a specific form in which we make an application to the jurisdictional officer, and a certificate of tax residence is being issued. Similarly, by the overseas vendor also, the overseas vendor also gets that certificate of tax resident from his jurisdictional tax authority. Why there is a need to differentiate a certificate of tax resident with PAN? Because PAN is to be obtained by any person who is having taxable income. So there is a possibility that a non-resident is having business income, having PE also. In that case, the non-resident will have a PAN in India. But can we say that non-resident will also obtain the certificate of tax resident from India? No, because the non-resident is not a resident of India. So the non-resident will not get the certificate of tax residence, even though the non-resident is having a PAN in India. So is it that only certificate of tax residence is required to be submitted and the treaty benefit is can be availed? No. If we see Section 90 subsection 5, Section 90 subsection 5 says that in addition to certificate of tax residence, a non-resident is also required to provide Form 10F. Form 10F is a one-pager form which mentions that, okay, the status of the non-resident, whether he is an individual, whether he is a LLP company, the nationality / place of incorporation, the TIN number, like we in India we call it PAN number, overseas they call it TIN number or UIN, that is tax identification number or unique identification number. The TRC period, like in India we have a financial year, in UK also we have very similar financial year, barring a difference of few days. If we go to US, they follow a calendar year. So different countries follow different, what do you say, financial year or taxable year, you can say, and the address. So Form 10F is required to be submitted online, and that Form 10F will capture information like the status, the status, what I can say, the nationality, the PIN number, the TRC period, the address. Is it that Form 10F is to be submitted in all the cases? No. If the certificate of tax residence is having all this information, then Form 10F is not required to be submitted. Was it that Form 10F is required to be submitted electronically always? No. So prior to 3rd July 2022, Form 10F was required to be submitted, but there was a manual submission. But after 3rd July, there was a notification which was issued by the legislature exercising the power under Rule 131, and they mandated that Form 10F is to now submitted electronically. Is it that in today, none of the situation Form 10F can be submitted manually? No. Legislature in December 22 issued a notification and instruction, in fact, and they said that if a person is not having PAN and is not required to obtain PAN, then the manual Form 10F is still acceptable. So I'm saying two things. They said, if a non-resident is not having PAN and non-resident is not required to have PAN, then Form 10F can still be submitted manually. One more thing which the tax professionals and the professional fraternity should take note of is this: while we prepare Form 10F or while we submit Form 10F, whatever documents or whatever information we are using to fill the information in Form 10F, and whatever document we are relying has to be kept, because those informations can be called by the tax officer at any given point of time. So 3 things I have talked about. A non-resident is eligible for treaty benefit basis certificate of tax residence plus Form 10F. The Form 10F has to be submitted digitally. If my TRC contains all the information that is required in Form 10F, then Form 10F is not required to be submitted. Plus, this Form 10F has to be submitted digitally. Plus, there are certain situations wherein Form 10F can be submitted manually, wherein the non-resident is not having PAN and the non-resident is not required to have PAN. One of the question that is being raised is that, okay, generally status is not being mentioned. So like I said, that if any information is not mentioned, which is mandatory in Form 10F, then Form 10F is required to be submitted. So if the TRC that is being issued by the overseas jurisdiction do not contain the status, whereas the person is individual or what is a company or LLP, then Form 10F is required mandatorily to be what I can say submitted. And if the question is whether certificate of incorporation is sufficient, no. Certificate of incorporation is not a document that is being asked by the legislature. Legislature very clearly says that, okay, the TRC you have to submit and Form 10F you have to submit. There can be only one exception, that, okay, if the TRC contains all this information. If the TRC is not containing all this information, the same cannot be substituted by another document like certificate of incorporation. So this is, I just explained what I can say. Now, having seen that genesis, what is the reason why Form 10F is required? Now, let us understand why there is a easiness, why there is a sudden apprehension from the fraternity at large that Form 10F should not be mandated digitally. So, when we are saying that Form 10F has to be submitted digitally, the same has to be submitted digitally on income tax portal. Now, income tax portal can be accessed in two ways. It can have a PAN-based login, it can have a TAN-based login. TAN-based login is not relevant for us. PAN-based login is relevant. So this is the this is where the there is a issue, and this is the reason for apprehension or uneasiness. Many people get to believe, or people are believing that that because Form 10F has to be submitted electronically, which is only possible when I'm obtaining PAN. So in a way, non-resident is forced to obtain PAN. Now let us see what I can say. Who all are required to obtain PAN? Because it is about legal literature, I'm just displaying it. So every person having total income assessable under Act exceeding the maximum amount not chargeable to tax. So who all are required to have what is a PAN? Every person who is having taxable income and which is accessible under Act exceeding the maximum amount not chargeable to tax is required to obtain PAN. When we see section 139 capital A, subsection 1, limb 1, this is the first thing which they are talking. So is it that if even if I'm having 0 rupees income, I'm required to file return of income? So like individuals have a threshold exemption, companies LLP do not enjoy any exemption, threshold exemption. So every person, if they're having total income, they're required to file, they are required to obtain PAN. One of the arguments that is being taken that, okay, when we say accessible under the Act, it means that it should be taxable not only under the domestic law, it should also be taxable under the treaty. So, for example, like I just said in the previous slide, during the previous slide discussion, that if a non-resident's income is taxable under the domestic law, but the same is not taxable under the treaty, non-resident is not required to pay taxes in India, he can avail the treaty benefit. So the same argument is being used, and one of the views that is being taken by few stakeholders is that if my income itself is not taxable due to treaty provisions, why should I be obtaining PAN? I will not be, it will not be said that, okay, I'm accessible under the Act. So I'm not covered by this law. This Supreme Court judgment also, G case, it was after transmission commission, wherein Supreme Court in the G case said that, okay, non-resident can, if the non-resident feels that the income is not taxable under the treaty, then that is not accessible under the Act. So people use that decision and they say, okay, there is a Supreme Court decision. But I'm saying when we are claiming that treaty benefit is eligible and I'm not required to pay taxes under the treaty, and therefore I'm not required to obtain PAN, we also need to be mindful of the fact that treaty eligibility or treaty invocation is not automatic. It comes with a lot of things. For example, when we see treaty has anti-abuse provisions also, like beneficial ownership, limitation of benefit provision, PPT, principal purpose test, that is in all the recent treaties which are amended by MLI, the preamble also. So who is going to see all this? Are we trying to say that, okay, the non-resident will sit on his own judgment, so I am deciding whether my income is taxable or not without giving a chance to the legislature? In my personal view, this is not the right way. In my view, the appropriate way to read the law is, I have a view, okay, I'm taxable under domestic law, but I'm having exemption under treaty, and I'm complying with all the conditions. The legislature has to get a chance whether my claim is right or wrong. So it is my view that if a person is claiming exemption under the treaty, the person will still be covered by the first limb, and there is a requirement of obtaining PAN. But for the sake of discussion, let us assume that PAN is not required and I'm not covered by the first limb. Let us see the second limb. It talks about every person carrying on business or profession whose total sales, turnover of gross receipts are or is likely to exceed 5 lakh rupees in a previous year is required to obtain PAN. So there's no requirement that the person's income should be taxable. What the law is saying, every person who's carrying on business or profession and the total sales or gross receipt exceeds or is likely to exceed 5 lakh rupees in a year is required to obtain PAN. Now, how to decide whether I'm covered by the second limb or not? If we see section 9, section 9 has various clauses. The first limb is business connection. So it is recently amended to include significant economic presence. Earlier, what used to happen, there used to be a difference between business with India and business in India. What was business with India? Let's say I, as an Indian taxpayer, I want to import certain goods from US. I placed an order to a US company, and US company shipped those goods to me. US company is not having any presence in India, nothing. They simply shipped the goods because I placed an order online. So that was covered as business within India. In comparison to a person or a non-resident having a presence in India and executing all the transactions. So there used to be a difference in business with India and business in India. But with the introduction of significant economic presence, this difference of business with India and business in India is blurred. So it is very difficult to say that business with India is now not covered with the extended definition of business connection. The term business connection is being defined in section 9. It is also judicially interpreted. One of the leading judgments is R.D. Agrawal. So if I say business connection and my turnover in India is more than 5 lakh rupees, whether or not I'm accessible under the act by virtue of treaty, I'm still required to obtain PAN. We often see that the passive income also with the non-resident earns. The passive income can be dividend, interest, royalty, FTS. All those will also constitute what I can say business. So in those cases also, non-resident is required to obtain PAN. So two things I'm saying: if a non-resident is having taxable income, even though the income is non-taxable due to treaty provisions, PAN is required. There is a different view. My personal view is different. My personal view is if I'm claiming treaty benefit, then I'm required to obtain PAN. Even though I'm not covered by the first limb, I'm obviously covered by the second limb. That okay, if I'm having business with India, I'm at turnover is exceeding 5 rupees, I'm still required to obtain PAN. Is it that every person is required to obtain PAN and there is no exemption? No, legislature has given exemption. They are saying that okay, if you are having specified funds or you are eligible foreign investor, you're not required to obtain PAN. So legislature has given exemption in its wisdom. Is it that there was never an exemption? So no, till 31st December 2015, there was a blanket exemption to non-residents. Blanket exemption. All the non-residents were exempted from obtaining PAN, but that requirement or that relaxation was enforced only till 31st December 2015. That relaxation is now being removed. So the law as it stands today mandates every person who is falling within any of the clauses in section 139 capital A subsection 1 is required to obtain PAN. I have discussed only the first two limbs which is relevant here. One of the questions that is being asked, what do you mean by non-resident is not having PAN and is not required to obtain PAN? So the exemption that is currently being displayed on the screen, this is the situation wherein non-resident is not required to obtain PAN because the legislature in its wisdom has given exemption. So I explained that when Form 10F has to be submitted digitally, the legislature gave an exemption to those persons who are not having PAN and not required to obtain PAN from filing this Form 10F digitally. So one of the queries that is being raised was what is meant by the legislature when they say PAN is not required to be obtained. So the exemption that from obtaining PAN that is currently being displayed on the screen, that is the situation which legislature is having in its mind when the legislature itself has given exemption. So there was a blanket exemption which was in force till 31st of December 2015 at 2015, and that is exempted. That exemption is now taken away from 1st of January 2016. So the law that stands today, only in two situations PAN are not required to be obtained. Those situations are given. And what I can say, in all other situations, if I'm falling under any of the clauses in section 113 capital A, I'm required to obtain PAN. So now we have seen, now we need to analyze what were situations which we face and we advise our clients whether a non-resident is falling in these two limbs or not. If the non-resident is falling in these two limbs, then he is required to obtain PAN. If the non-resident is required to obtain PAN, then he has to obtain PAN and then submission of Form 10F digitally will not be an issue. I think the entire issue was only with respect to that there is a difference of opinion with respect to obtaining of PAN. Few believe that PAN is being forced indirectly by the legislature through what I can say through this what I can say Form 10F. The other view is no, it is not like that. The law is very clear and the law has clearly mandated that okay, in this situation PAN is required to be obtained. There are a few queries, I'll just try to see them. So one of the points that is being raised is okay, whether clause 2 will include what I can say if a non-resident is having capital gains income or not. So when we see section 9 subsection 1, 9 subsection 1 talks about all kinds of income which is deemed to accrue or arise in India, which includes capital gains also. So one may take a view that okay, because business income from business or income from profession is different from capital gains, so I'm still not covered by the second limb. That can be a possible argument. I will not say that argument can be without merits, but in my personal view, because the capital gains will be subject to tax in India, I will be covered under the first limb itself. I will not be covered in the second limb because that is definitely not a business or profession, but I may still be covered under the first limb and PAN may be required. But if the concern is of the view that okay, I'm not covered by first limb because I'm exempted from capital gains in the treaty, obviously second limb won't cover. Second limb won't be covering situations wherein capital gains are taxable under the domestic law because that is not a business or profession. If it is business or profession, then it will not be a what I can say capital gains. It will be a income from BGBP. We just explained that okay, if we see The source rule, when I said that, okay, the business or profession, I explained the source rule also, which includes dividend, interest, royalty, fees for technical services. There is a view, this one view that, okay, when we say passive income, which is dividend, interest, royalty, FTS, then that is not business, and accordingly, it may not be covered in second lien. So I have a different view. So if we see the law prior to 1976, all this dividend, interest, royalty, FTS, everything was covered in 911 only. Because under 911, the taxability was restricted, and it was taxable only and only when, what you can say, there was a business connection. And in treaty, there was no P which was getting formed. India was losing taxes. There were various treaties which India had entered prior to 1976, wherein India was having a right to tax royalty, FTS, but because there was no law which was giving right to tax all those income in India under the domestic law, on simply on the source based, it was not able to tax that. So legislature amended the law in 1976. They said ki no, dividend, interest, royalty, all these are passive income. I'm calling them collectively as passive income. Those are taxable under the domestic law, even though the non-resident is not having a P in India. So this is one of the question which is being raised. If a non-resident is having a royalty income in India, whether he is required to obtain PAN or not. So as far as obtaining of PAN is required, if the non-resident is having royalty income from India, is required to obtain PAN, even though the royalty may not be taxable by virtue of treaty, or even if the, what you can say, this ultimately there is no tax being paid by virtue of 916 exception which are there, because if there is a transaction in NR to NR, is being exempted. So non-resident is required to obtain PAN in royalty cases also. Now, having seen the law with respect to obtaining of PAN, that okay, PAN is mandatory in all these situations, there are few other reasons why stakeholders believe, or there's a view that okay, PAN may still not be required. So, like we have seen that okay, there are few sections under the law which grants exemption from filing return of income. There are few sections under the law which grant exemption from filing return of income. So let us first see what the law is with respect to filing return of income. Every person, being a company or a firm, or I have taken example of only company or firm. Individuals are separate because there is a threshold which is available to individuals. I have not dealt that here. Every person, being a company or a firm, shall on or before the due date furnish a return of income, including loss or the income of such other person during the previous year in the prescribed form and verified in the prescribed manner, and setting forth such particulars as may be prescribed. This is what the law is. So the law requires that every person is required to file return of income if he is having income in India. There are certain sections which grant exemption from filing return of income. For example, if you see section 115 capital A, which deals with non-resident passive income like royalty, FTS, dividend, they say that okay, if the non-resident is paying tax in India as per the domestic law, at the rates mentioned in the domestic law, non-resident is not required to obtain and not required to submit return of income in India. There's a recent change in this section. Prior to April 2023, the tax rate that was being mentioned in 115A was 10%, which is now increased to 20%. So if we compare it with the treaties, available treaties, there are very few treaties wherein the rates are 20% or more than 20%. So in a way, the legislature is saying that if you want to obtain exemption from return filing, you better pay tax at the domestic law rates. There is another section, section 115 AC. It talks about income from bonds, global depository receipts, and capital gains. There, the legislature said if the tax is being deducted at the rates in force, then also return filing is not required. So what is the difference in the first exemption that I have talked about and the second exemption? In the exemption from return filing given under section 115 capital A, exemption is given only and only when tax is being deducted at the rates mentioned in the domestic law. So domestic law rate is 20%, treaty में 10% है. अगर मैंने 20% के हिसाब से नहीं काटा, 10% के हिसाब से काटा, then return filing से there is no exemption. Vis-à-vis 115 AC, it talks about bonds, global depository receipts, capital gains. They say that even though the tax is being deducted at rates in force. So when we see rates in force are defined in section 2, subsection 37, capital A. They take with the treaty. So the difference between the first exemption and the second exemption is, in the first exemption, tax has to be deducted on the domestic law at the rates provided in the domestic law. In the second exemption, the tax can be deducted under domestic law or the treaty, whichever is more beneficial, and still exemption can be given from return filing. Now, there is a view that, okay, because the non-resident is exempted from filing return of income, PAN is not required. And because PAN is not required, digital submission of Form 10F should not be there. In my personal view, filing return of income and obtaining PAN, or filing return of income and filing Form 10F are two different requirements. There are two different requirements which the legislature deals with in two separate sections. Like PAN is dealt by section 139 capital A, which mentions situations in which PAN is required. Return filing is mentioned in section 139, wherein no exemption is given. The exemption is given in usual sections like 115 capital A, 115 AC. There may be other sections also. So I'm saying there is a view which is taken by few stakeholders that, okay, because there is no requirement of filing return of income, there is no requirement of obtaining PAN. In my personal view, I hold a different view. I say no, filing return of income and obtaining PAN are two different things. Filing return of income and filing Form 10F are two different things. For the timing, assuming that this view is the correct view, that, okay, if I'm exempted from filing return of income, I'm not required to obtain. Now, we all might be aware that majority of the situation, the transactions are between related parties. Majority. When I'm saying voluminous transaction, there can be definitely one-off transactions, but voluminous transactions are between related parties only. If there is a transaction between related parties, then transfer pricing provisions will kick in. Once the transfer pricing provisions kick in, then there is a requirement of filing Form 3CEB. There is no exemption from filing Form 3CEB. So how I'm going to comply with that? And there are heavy penal consequences for not complying with Form 3CEB. So in my personal view, a view that, okay, because I'm exempted from filing return of income, PAN is not required, may not be the correct view and may not hold its ground before the courts, and it may lead to another non-compliances also, like non-filing of Form 3C, non-complying with transfer pricing provisions, which may have penal consequences. So that is there. There's a question which I've just addressed, that exemption from filing return of income will not lead to a situation that PAN is also not required. Obtaining of PAN requirement comes from section 139 capital A. There is no exemption in that. There are only two exceptions which is being dealt by. Those are specified funds and eligible foreign investors. If your case is falling in that, then obviously PAN is not required. If it's not falling in that, simply because return filing is not required, the requirement of obtaining PAN is not done away with. PAN will still be required. So there is another interplay. So one of the reasons for people saying that, okay, PAN is not required is return filing exemption. There is another view. Like we all might have seen that there is one section 206 AA. 206 AA deals with higher withholding tax. The law says that, okay, it mentions certain situations, and it says that if a person is not having PAN, then tax has to be deducted at the higher of the following rates. The legislation that says that tax is required to be deducted at the highest rates. Rates is specified in the Income Tax Act. Rates in force. Rates in force is defined in section 2, subsection 37, capital A. It will take us to individual sections like 115A, 115JC, no, 115A, 115AC. It will take into the treaty also. And 20%. So, is it that 20% is the highest rate? No. There may be a situation wherein the rates given in the Income Tax Act is more. Like if we remember prior to 2013, I think till 2013, 115 capital A mentions the rate of 25%. Like currently it is 20%. Before this amendment in April 23, the rate was 10%. So I'm saying 206AA mentions that the person is not furnishing PAN, tax has to be deducted at the highest rates. What is the higher of all the three rates is the rate that is given in the treaty, the rate that is given in the domestic law, or 20%, whichever is highest. This 20% need not be topped up with surcharge and education. This is a blanket 20%. So the first two limit, that is rates is specified in the Income Tax Act and rates is specified in the Income Tax Act, has to be topped up with surcharge and education cess. Rates in force again will not be topped up by anything, because rates in force, if it is taking me to the treaty, the rates mentioned in the treaty are final. There is no need of adding any education cess or anything on the that rate, and 20%. So now thinking of a situation that okay, a non-resident is having royalty income or what is capital gains or anything, is not having PAN in India. So this section says that okay, notwithstanding anything contained, you deduct tax at the rate of 20%. So now PAN will be required by everyone. Is it that there is no exemption? Yes. So there is a rule 37 BC, wherein because non-residents were having apprehension that I'm being forced to obtain PAN. So the legislature brought an exemption in rule 37 BC, and they said that okay, if the nature of income that is being earned by the non-resident is dealt by section 194 LC, then this section is not applicable. This higher withholding tax is not applicable. Or if the nature income is of interest, royalty, FTS, dividend, capital gains, and the non-resident is furnishing TRC, that is tax residency certificate, PIN number of UIN, name, email ID, contact number, and address. If all this information are given, there is no specific form in which this information may be given. This can be given over email also. What? TRC, PIN number, name, email ID, contact number, and address. If all these informations are given by the non-resident, and the nature of income is interest, royalty, FTS, dividend, and capital gains, then this higher withholding tax rate is not applicable to the non-resident. And they've also exempted all those persons from this section who are not required to obtain PAN. So we dealt, when we saw section 139 capital A, we saw that there are two situations: specified funds and eligible foreign investors. They're not required to obtain PAN. This section, this 206AA higher withholding tax section, is not applicable in these situations. There's a view that because I'm not required to have higher withholding tax, and because I'm not covered by this, and I'm exempted from obtaining PAN. There's a view that is prevailing. In my personal view, I have a different view. In my view, again, this is a different requirement. Obtaining PAN and higher withholding tax are two different things. So legislature has only relaxed that okay, even if you're not having PAN, but you are having the income in the nature that is being dealt with 37 BC, rule 37 BC, and you are submitting all this information, then I am not going to cover you by this section, and higher withholding tax is not required. But does that absolve me from obtaining PAN? No, because there is no relaxation that is given under 139 capital A. Wherever the legislature felt that okay, relaxation has to be given, they gave it. But to simply say because I am not covered by 206AA, and thus I am not required to obtain PAN, may not be a correct view. There is a view which people hold. In my personal view, withholding tax and obtaining of PAN are two different requirements, and the same need not be mixed. That is my personal view. So we have discussed the genesis. What is the reason Form 10F, why it is required? What is the reason for apprehension? Very we said it because it is a PAN-based login. Until you obtain PAN, what do you say, exemption, what do you say, you cannot submit Form 10F digitally. And the exception that is being given by the competent authority that you're not having PAN, not required to obtain PAN, I'm not covered by that exception, so I'm required to obtain PAN. That is the reason why there's a apprehension from the stakeholders. They are discussed that okay, interplay between return filing and exemption, and interplay between higher withholding tax and relaxation. Having discussed all these things, this is what is relevant with the current topic. Now let us move to puzzle. Before moving to the puzzle, there are a few queries. I'll just take those queries one by one. What if a certificate is obtained under section 195 stating that income is exempt? So income is, first of all, what I can say, if income is exempt, there won't be any withholding. But if I'm having an income which is subject to tax, what I can say, if there is an income, if I see section 139 capital A, it says total income. Total income is wide enough to include exempt income also. So if I go strictly by the letter of the law under section 139A, PAN is still be required. But let us see practically also. So the person's income is not taxable in India; it is exempt. They've also obtained a certificate from tax authorities only. So to say that okay, you go and obtain a PAN may be a little harsh. So, but I'm saying if we read the law as it stands today, PAN will be required. But practically, it will not be appropriate to ask the non-resident to obtain PAN. But in absence of any exemption given by the legislature, the non-resident will be required to obtain PAN in India. And I'm sure because all the certificates currently are being given digitally under 195 also, so the non-resident might be obtaining PAN also, making an application under PAN-based application. So this one question which is being asked, if I'm exempt in India for filing return of income as I'm not having a PE, then why a company should obtain PAN? We just explained this, that if we see section 139 capital A, then the capital A very clearly says if my income is accessible under the Act. So the income is accessible under the Act, under the domestic law, and thus PAN is required. Even if I'm not covered by that limb, the second limb talks about that if I'm having a business or if I'm having gross receipts from business or profession in India, and that gross receipts exceeds or is likely to exceed 5 lakh rupees, PAN is required. That is a law which is being which is there, and as per that law, PAN will still be required. And if I'm made payment to non-resident after obtaining no P certificate, see, no P certificate is, I just said that, okay, it is like I'm deciding on my own. I become a judge of my own, that, okay, I'm taxable and I'm not, my income is not taxable, my income is taxable. How the legislature is going to decide what is right, what is wrong, until unless a chance being given to the legislature. And the legislature has made ample, what do you say, in the law, they made ample arrangements in the law. When they say, okay, you come and obtain PAN, I will see whether income is taxable or non-taxable. And wherever they felt like, okay, this is not required, there they have very clearly said, okay, I'm giving you an exemption. If the TRC is not mentioning, if the TRC is not having period mentioned over the same, what is the period we have to consider it? No, this is, I think this we need to have clarification from the overseas tax jurisdiction. If the TRC, if their format is says that the tax period is not being mentioned, we can write a letter to them. The overseas vendor can write a letter and get an certificate from them. And on the basis of that certificate only, we can file Form 10F, and that period which is being there in the certificate has to be considered. This is addressed in what I can say, frequently asked question. We have a detailed discussion there also. So there is one view that okay, DTA benefit should not be restricted by local or country tax law, and DTA provides for the condition of being tax resident. Okay. So the first thing which we need to understand is who is going to decide that whether I am eligible for treaty benefit or not. When I explained the law with respect to PAN, I said that it is not that treaty comes without any conditions. The conditions attached to treaty. What are the conditions? Like if I'm having passive income, I should be the beneficial owner. Who is going to prove I am the beneficial owner? There is a limitation of benefits clause in the treaty. There is principal purpose test in the treaty. The preamble which said that it should not lead to double down taxation. So who is going to decide all this? So I'm not going to decide. As a taxpayer, I cannot decide everything on my own. If I'm deciding everything on my own, then it is like, okay, I'm saying, okay, I'm not taxable. How would the legislature come to know whether I have rightly availed the treaty benefit or not? So in order to ensure that there is a balance, legislature should also get time. And that is the reason they have made ample arrangements. And all the procedural aspects like filing return of income, obtaining PAN, paying taxes, all these procedural aspects are left to the domestic law. So treaty only deals with rights, division of rights, who is going to tax what or to what extent. It has nothing to do with what I can say, this procedural aspects, obtaining PAN or what I can say, filing return of income. All this being dealt by domestic law only. Section 206 is starts with notwithstanding anything contained. So if we see the law, section 206 double is overriding everything. Section 195 only tells you that what I can say, what is the rate of tax, or if the rate of tax is zero, whatever. When we, and this is actually captured in return filing software also. If you go and file return of TDS return, they'll ask you, they'll automatically trigger 20% unless you give certain information, which is mentioned in the exception. Even after submitting Form 10F and TRC, non-resident is required to submit no P declaration. See, no P declaration is not something which is a mandate of the law that people generally submit so that the income is not taxable. That's more of a practical thing which people do, but that may not be required. What I can say, if the nature of income is, let's say, royalty, FTS, then obviously P or non-P or no P declaration will not make what I can say sense. I'll take a pause because there are two more slides which have to be covered. I'll take the rest of the questions later. So this is a small puzzle, whatever we have been discussed. So the tick mark denotes exemption is available. The cross denotes exemption is not available. So the first row talks about a situation wherein there is an exemption from obtaining PAN. There is exemption from return filing. There is exemption from higher withholding tax. Whether Form 10F is required. One of the audience raised a question that what if my income is exempt and I have obtained a certificate under 195? Assuming that that is with respect to those eligible foreign investors who are also exempted from obtaining PAN. So there is no requirement for obtaining PAN. There is no requirement of filing return of income. There is no requirement. They are not caught by 206AA. Then whether Form 10F will be required? No. There won't be required to. There won't be any requirement to obtain or submit Form 10F in such a case. The second situation is of a passive income dealt by Section 115 capital A, on which tax is being deducted at the domestic rate. So I'm saying the second situation is of a passive income dealt by Section 115 capital A, and tax is being deducted at a, what can you say, domestic treaty rate, not treaty rate, domestic law rate. The taxpayer has also submitted TRC and all the other requirements which is mentioned in Section 206AA exception. Whether in such a case Form 10F is required or not required. In such a situation, Form 10F will not be required. Why? Because the precondition to submit Form 10F is that the non-resident should obtain treaty benefit. Like I said, the tax is being deducted on the domestic law rate, it is not availed, treaty benefit is not availed, so there won't be any requirement to furnish Form 10F. The third situation is wherein the non-resident is having income covered by 115 AC, like income from bonds. Here also, tax is being deducted at the domestic rate. The TRC and other information which exempts the person from higher withholding tax is not submitted. Whether Form 10F exemption is there? Yes. Why? Because the moment I'm availing treaty benefit, Form 10F is required to be obtained. Like I said that I have not availed treaty benefit, tax is being paid at the domestic law rate. Form 10F is required to be submitted. The fact that I have not submitted TRC and I have not submitted what I can say other requirements like name, email ID, contact number, which is there in Rule 37B, will not absolve or will not put a condition on me to submit Form 10F. So Form 10F exemption will be there. The last situation is wherein my income is covered by 115A and I have availed treaty benefit. And I have also submitted TRC and other information. Whether Form 10F exemption is there? No. Why? Because I have availed treaty benefit. So the thing which you need to check is that whether I'm availing treaty benefit or not. If I'm availing treaty benefit, then there is no exemption from submission of Form 10F. Form 10F has to be digitally submitted. Now, having seen the puzzle, I will be moving to certain frequently asked questions, which will address few questions which are being mentioned or which are being raised in question and answers. Whether TRC is mandatory to avail treaty benefit, one of the questions that is being asked. If yes, can the treaty benefit be denied in absence of TRC? Yes, as per section 90 subsection 4 or 90A subsection 4. If the non-resident is not submitting TRC, treaty benefit will be denied, it cannot be given. However, there are few cases, like one of the cases that we mentioned is cap industries. There are other cases also. We say that if residency can be otherwise established or otherwise substantiated, treaty benefit can still be availed and it cannot be denied. In that case, the non-resident was not able to obtain TRC. He submitted the return filing data like we have ITR. They furnish their returns, they furnish other information through which they were able to substantiate before the court that, okay, I'm a resident, I should be given the benefit. The court granted the benefit. But I'm saying, as an advisory, we should not advise to our client that, okay, even though TRC is not there, we can, what I can say, avail treaty benefit. That will be incorrect. Which period should be mentioned in Form 10F? When we see Form 10F, it have a clause to mention the period. That should be taxable in the source state, that is India. It should be taxable over the resident state, or the one which is being mentioned in the TRC. It should be as and what is being mentioned in the TRC. However, when we see the online format, for example, let's say I got a TRC from US resident. Now US follows a calendar year. So from January till December, that is a certificate of tax resident that US will issue. Now when I'm coming to India and filing Form 10F, now Form 10F, the default start period is April. So if I talk about the current period, then it will start from April 23. I can stop till December 23. So if I want to submit and having a regular income, what I will be doing, I will be submitting two Form 10F. One for January 23 till March 23, the other for April 23 till December 23. So the period that has to be mentioned in Form 10F is the one which is being mentioned in the TRC. At times, what happens that TRC for the previous period is there, and it's not. Let's say I'm having recurring income in India. It's not possible to obtain a TRC for January to December 23 or this 2023 calendar year on 1st January itself, and maybe my payment is due. So what I can say that has to be done. So the law very clearly says that if there is no TRC, treaty benefit cannot be given. So it is left to each practitioner's judgment whether to consider the old TRC and to take an undertaking from the recipient that, okay, you will obtain a fresh TRC and you will submit it to us. It is left to it, individual practitioner's decision. Legally, treaty benefit cannot be given, and department has been disputing this. Few countries issue TRC in their local language. Whether the same amount to sufficient compliance? No. Why? Because what is being written in that local language may not be knowing. So English translated version of TRC, which is duly apostilled, should be additionally obtained. From where this requirement of apostillation comes? It comes from Hague Convention. It says that any document that is in a language other than English, it should be translated to English and it should be apostilled. So that is there. This question is relevant only for what you can say last year, the year which got ended on March 23. So because the requirement to submit form digitally came in July 2022, so there was a question which was being raised in professional circles that, okay, I've already submitted manual form 10F in April or May 2022, whether I'm still required to submit digitally. No. At least for 2022 and 2023, that is April 22 to March 23, there was no requirement to submit it again. It is now already submitted manual form 10F. One of the things which we missed, I think it just escaped my mind, that exemption for, so I said that few are of the view that, okay, return filing exemption is there, then there is no PAN requirement, and I can on my own I can decide that the tax is not payable. So there is a plethora, a lot of what do you say, notices that are being issued currently by the tax department, and a lot of cases are going on currently. The leading is the what do you say, the Flipkart one, which is currently pending in the Delhi High Court. And they raised what is it? They said, okay, the income to the tune of 3,500 crores are payable. Why you not filed return of income? So to take a view that, okay, return filing is not applicable because my income is exempt, all this will lead to unnecessary litigation. So I would suggest that every tax professional and stakeholder should take a call appropriately, taking into account what the law is and not what the law should be. We may be wanting a number of things, but that is for the legislature to decide. I think we can focus on, in my personal view, one should focus on what the law is and how the law is being read.